Okay, thank you for joining us. Some of you already do know who I am, but I'm Brian Alexander, and I'm with MoneyWise with Brian and affiliated with Lawson's. So we do international investments around the world and do our best to try and assist clients to organize their portfolios, get the best returns on their portfolios, and to also be able to protect your portfolio as a client. So that's pretty much, I've been doing that for now probably 15 years, onshore, offshore, and offshore for me is the greatest, because you get great opportunities to be able to help people with a little bit more difficult situations that they're facing. So thank you so much for joining us. And if you are watching this later, a very big welcome to you, and I trust that you will gain some very important information. So as a financial advisor, I think one of the greatest things for us is to be able to assist you to diversify your portfolio as best as it seems fit for you personally. It might not necessarily everyone needs property, might not necessarily everyone needs to invest in the markets. It all depends on your particular portfolio. It also depends on your risk appetite. There's various different facets that's going to affect how you invest and how we're going to try to diversify your portfolio. So, and that's the reason for today's webinar and discussion is around how to actually diversify. One of the products can help you diversify your portfolio. So I'm going to hand over to Ben Rockel, who's with 79th Global, and this is definitely one of the products that certainly will assist you in diversifying your portfolio if you're looking to invest a smallish or a large lump sum as part of your investment strategies. So Ben, thank you so much. I will leave you to do the introduction of your company and also the product as well. And then if you have any questions, just pop it in to the question area, and then we will certainly address that question at the end of the meeting, although I'm going to be asking a few questions as well. So Ben, over to you. Thank you so much.
Brian, thank you, Brian. Appreciate the introduction there, and thank you everyone for joining us this evening. So, as Brian mentioned, I work with the 79th Group, but I'm based in their Dubai-based entity as I head up the capital raise for our projects across UK property and natural resources. But the plan is I hope to run through a very brief presentation for you this evening that covers off the 79th Group, a little bit about what we do, as well as the type of products that we offer and how you can get involved in some of those projects. But if you just allow me to share my screen here, and then I will run through this presentation as well. So can you see that one there, Brian? Just
Yes, everything's on 100%. We can see it.
Perfect. So just an introduction to the 79th Group. So the 79th Group is a family-run asset management company based in the UK, but it's based between Liverpool and Manchester, so the northwest of England. And the reason for that is primarily because that's where we buy the majority of our UK property assets. So as you can see there, you've got the Webster family, you've got Dave there, the chairman, Jake in the middle, and Curtis as well. But a lot of people ask, why are you called the 79th Group? Why 79th? Well, although our bread and butter in our business is UK property acquisition and development, the other side of our business is natural resources, where we own a significant portfolio of natural resource concessions in West Africa, and a vast majority of that portfolio is gold concessions, and gold is the 79th element of the periodic table. So that's just a little anecdote about where we get our name from. But now just moving on to a little bit about our story. So the chairman you just saw there, Dave, he entered the UK property market in 1985. And what he did was he's begun targeting those distressed sales or those distressed assets. And how we define that are those assets that are subject to repossession by the banks, or what we're seeing a lot of today is property developers that priced their cost to build in 12, 24 months ago. And as they've come to the end of this development, they've run out of cash. And the primary reason for that is the cost of raw materials, timber, steel, or aluminium has doubled over that period. So they've essentially run out of cash and now they're looking for a lifeline. And we presented ourselves in the northwest of England to be that lifeline for these particular vendors. So if you're in a bit of trouble, come to the 79th group is essentially one of our mantras. But as you can see, Dave, he entering the UK property market in 1985, and between 1985 and 2007, he built a portfolio of over 700 properties in the UK, naming him one of the UK's largest private landlords. Of course, he made a significant personal fortune off the back of this and then entered semi-retirement. But if you ever get the pleasure of meeting Dave, he can't sit still, a very ambitious individual. And so he entered West Africa, or the Republic of Guinea, where he began to learn his trade in the natural resources sector. So he began to develop that side of the business. By 2016, we'd set up 79th Resources that looked to target and acquire natural resource concessions in West Africa. And the reason for that primarily is that they saw the ripples in the water. So what did we have since 2016 when we've had the vote for Brexit in the UK, the election of Donald Trump, and then we had the COVID fallout, and after that we've had the rise of inflation, the Russian invasion of Ukraine, and now unrest in the Middle East as well. It seems to never stop. And what happens here is that these opportunities the Webster family were offered were simply too much for the Webster family alone. And so in 2016, we opened the company up to private investment. And that's where we've been today. And the reason for that is the checkbook was just too small, or the Webster family Webster family's checkbook was too small. But then just moving on, it's not just about the Webster family. We've also got a significant board of directors as well that are well-renowned names in compliance and regulation, finance and accountancy, and geology and mining. So you've got Natalie Beelis there, our CEO, and she was ex-chief auditor for the likes of Nintendo, John Lewis and EasyJet in the UK, and she was also compliance chairwoman to the National Savings and Investments in the UK. So she maintains our compliance and regulation aspect to the company. But also, just to touch on a couple of those names across the bottom there, you've got Andy Cole, who used to be ex-board director at HMRC, and during his time, he reclaimed over 13 billion of unpaid tax from foreign governments. He wrote the dual tax treaty between Liechtenstein and the UK, so a very, very prominent individual. And in 2011, he was awarded a CBE, or the Commander of the Order of the British Empire, in 2011. And in a similar vein, you've got Adrian Kelby at the bottom there, who used to lead the Office for Nuclear Regulation in the UK. And again, in 2020, she was awarded a Commander of the Order of the British Empire by the late Queen of England for her services, or her public service, essentially. So what I'm trying to say here is these types of individuals wouldn't sit on our board unless we were fully compliant and regulated in all of the jurisdictions in which we operate. But what we get a lot of, because as I've mentioned or touched on both of the divisions of the 79th group, I just wanted to cover off really how we managed to operate in these two, what look like very distinct sectors. And the way we're able to operate across these sectors is the fact that our approach remains the same. So in both sectors, it is the acquisition and development of distressed assets. So in the UK, to add your value, you build up. In West Africa, to add your value, you dig down and you find it. So in its rawest sense, our business model is the acquisition and development of distressed land with value. and we realise that value through various means. So that's how we're able to operate across these two, what look like very distinct sectors. But now I'm coming on to what we offer to our clients in particular, and how they can get involved in our various projects across UK property and natural resources. And what we offer is what's called a loan note, sometimes called a property bond or a fixed income property bond. And they are essentially a contractual obligation between yourselves as investors and the 79th Group. Those funds are lent to us for the acquisition and development of our target assets. And in return, we establish when we'll repay that money. So the term of the investment, how much interest we'll pay over that term, or the return on investment, and on what days we'll pay that interest. So the interest payment schedule. What is the security of these types of products? Well, which is a very, very important aspect, of course, to any investment, is that loan notes have the same security a bank has when it issues a mortgage to a borrower, and that's called a first charge. So, for example, if you fail to pay your mortgage, the bank steps in and repossesses your house or your asset. It works in exactly the same way. If we fail to pay our clients, they have full first charge to liquidate the assets of the 79th Group. However, you can't have 3, 4, 5, 600 clients all liquidating assets in one particular project. So we have a fully regulated security trustee that sits on top of that particular loan note to be able to liquidate assets on behalf of investors. And I'll mention a little bit more about the trustee in a moment. But what are some of the features of these particular products? So they're only 1 or 2 years, which I think Brian will agree. They're very flexible, so you're not locking your money away for long periods of time. You can be paid periodically, so you can choose a monthly, biannual or annual income, depending on whether you need income or capital growth. You can invest in a wide variety of currencies, so pound, dollar, euro in particular, but also a further 24 currencies as well. They are asset-backed investments. So when I mentioned there that you have security over the assets of the company, meaning that they're an asset-backed investment, I believe they're a very important investment to hold, particularly during this point in the market cycle. A lot of our clients like to know where their money is invested, and they like to know how they're going to get their money back should anything go wrong. And then you've obviously got that senior security, that first charge, that fully regulated security trustee that sits on top. And with all of our investments, we charge 0 fees. So if you invest £25,000, dollars or euros, you get £25,000, dollars or euros back, plus your interest. So there's no consideration of fees in any of our investments. So TNT trustees, they are the security trustee or that entity that sits on top of our particular product to oversee and manage the security on behalf of investors. TNT, they are fully regulated by the Gibraltar Financial Services Commission. And the reason why they are domiciled in Gibraltar is because post-Brexit, after 2016, we offshored our security trustee to Gibraltar because we had a wide variety of clients in Europe who were worried about the final withdrawal agreement. And the Gibraltar Financial Services Commission is covered under UK or FCA and EU or European Securities and Market Authority regulation. So we're covered under a broader regulatory jurisdiction. But what they also do is they audit the company on a quarterly basis, ensuring the company is solvent, i.e. money in the bank, which is always a good thing. Our interest and capital repayments are being made on time to our clients, as per the deed of accession, which I'll speak about. And also they audit us in relation to our AML, counter-terrorist financing and due diligence processes as well. So to make sure that we adhere to the highest international standards. So just a bit before I turn to the types of returns that we offer to our clients and the different payment schedules, this is just a little story about the old workhouse in Hexham. Now, this was a site that was being sold to a US equity fund or pension fund, I believe, in November 2021 for £1.9 million. Now, for some reason, this particular fund pulled out of the deal, but it came to light that the previous owner owed HSBC several mortgage repayments. So he was essentially subject to repossession. So Jake, our managing director, he went to view the site. He really liked it, lots of opportunity for capital growth. And we sat the board of directors down on the 17th of December 2021, and we offered the previous owner £975,000 for it. We later exchanged on the 24th of December, so on Christmas Eve. So a nice present for the Christmas present for the 79th group, achieving a market discount of 49%. However, we're turning that into 34 residential units with a gross development value of £10 million. So our rough gross percentage return is 1,000% plus. Now, of course, we've got development costs. Of course, we've got interest to repay to our clients. But by utilising private finance, we were able to step in on this deal and secure it very early on and at significant discount. So by utilising private finance, it gives us the speed, agility and flexibility to acquire lucrative assets. So when we talk about the types of returns that I have stated here across our 3 separate projects that we have live now, that is how we're able to pay returns of 12 to 18% on an annual basis. So just going to briefly touch on these types of projects that we have live. I won't go into too much detail. I'm sure Brian could do that. But we've got LL5, which stands for Luxury Living 5, and that targets luxury lodge parks in the UK. So large parks in the UK where we see high demand. A lot, of course, with the geopolitical tensions, the fluctuations in the sterling, the rise in interest rates, people are holidaying in the UK. So we've seen a large uptake in yield in these types of assets. We offer 12 to 35% returns because there are 1 or 2 year products, and there are various interest schedules, so monthly or biannual. The minimum investment on LL5 is £10,000, dollars or euros, which I believe is a very accessible minimum investment, allows clients to grow confidence with us. And then as they begin to see their interest, we often see clients look to increase that allocation, whether into LL5 or into other projects that we have live as well. In the middle there, you've got CM3, which stands for Commercial 3. And this is the target of large commercial units in the UK, because as companies are shifting to hybrid working environments, these large commercial units are essentially redundant. But we recognise that fact. We buy these assets, repurpose them to small and medium-sized enterprises, and then we sell those off plan. So this is a 1 year term only, offering returns of 12 to 17%. And the reason for the spread there is because it's whether you take monthly, biannual or annual returns. So depending on how you wish to be paid, whether you want income or capital growth, determines the type of return that you receive. And then finally, we've got RS3, which is Resources 3. So that's across our natural resource division in West Africa. We're raising 100 million euros, and that's because we have 3 flagship assets following very positive drill results that we received earlier in the year. And now we're going to take these through a second phase of exploration alongside beginning the extraction of gold from these particular sites, as well as the acquisition of a further 2 concessions as well. Of course, we can share more information on the specifics of these projects, but I just thought I'd give you an overview of the type of products that we have on offer today. And then I think it's important just to touch on the track record of the 79th group. So we launched our first bond, as you can see there, in 2016, and you can see all of those that have been repaid since. And you can see those there that say closed. That just means that we're no longer raising any further funds into these types of products, but they're now in the repayment phase. And then you can see LL5, CM3 and RS3 there that are currently still raising for that particular project. But it's important to note that we have 100% track record in interest and capital repayments, and we've maintained that throughout all of our bond series. And I think also it's important to mention that 94% of our clients continue to invest with us at the end of the term of their investment. So at the end of that 1 year term, the clients receive their money back, their last interest payment and their capital, and then they look to reinvest into further projects. And then I just thought it'd be important just to put some social proof from clients. So we've got, I think, about 62 now. I know it says 46 5-star reviews on Trustpilot. So please check those out. They're from clients all over the world. So we have clients from over 53 different jurisdictions globally. So it's just a bit of social proof from some of our existing clients. But that's everything I wanted to mention today, Brian. Happy to take some questions if you have any, or if any of the audience do as well.
Well, I thank you so much. That was really informative. Thank you so much, Ben. And I do have a few questions. So if you do have questions, please, if you can just slot them into the box, wherever it is on your computer, and if you can just ask those questions. But I'm gonna ask a couple of that. Some of it you pretty much have covered, but it's just nice to refresh a little bit. So I wanted to actually ask, so what would you say is the maybe the one or two the biggest benefits of investing with your company and with a defined return? What would you say that is, Ben?
One of the greatest benefits, I think, is we have there's similar companies in our space, but what we provide is diversification into the UK leisure and UK commercial sector, as well as the natural resources sector, which I believe has often been very inaccessible to clients. And we offer opportunities at very low minimum investments to be able to have exposure within a client's portfolio. And then secondly, I'd say in terms of that defined return or that fixed return, is that at the moment, I think with the markets being so volatile, what I've experienced with a lot of our clients is that they're looking to shield their portfolios for the short term. So they're looking for a good fixed return, but they don't want to lock their money away for 3, 4, 5 years. They just want to shield themselves in the short term, and perhaps 12, 24 months. They can then look to reallocate to different asset classes, and that's what our products are able to provide.
Thanks. I think one of the other interesting things about it, the market, when a person takes a lump sum of money, and we as advisors generally will tell a person, you're really going to look at minimum of 5 years in the equity markets to be able to get your return. Now, it doesn't mean that it will take 5 years. It sometimes can be 6 months. But on the other hand, it could be 7 years. So we always say 5 years at least, because the markets can turn on you, and then they can start increasing on a long run. In the long run, you will in the equity markets get your returns, but you're never investing for a year or two. And what is unknown, especially in the first couple of years, when I say 2 to 3 years, you are not sure what is your actual returns going to be. Is the market going to turn down slightly and then come back? So it's a little bit unpredictable. So I think this is where your product certainly does help. Do you want to add something to that?
Yeah, of course. I think a lot of people use part of their portfolio to forecast their returns over a select period. And again, going back to echoing your point there, is I think where people build quite a large sort of traditional asset portfolio, so the bond, stocks and cash, all those fixed deposits, they're looking for greater exposure to alternatives. I think you can probably echo that point, is alternative investments have definitely been on the rise over the last 12, 24 months. And we provide access to these asset classes at low minimum investments, because you usually find a lot of these investments are $100,000 minimums or even higher, especially in private equity. So offering these products gives clients greater diversification and exposure to a broader range of asset class as well.
I think the other thing that you mentioned, and you went over it fairly quickly, or not that quickly, but fairly quickly, was the fact that it has fixed asset behind it. And a lot of the alternative, not all of them, but a lot of it, alternative investments, they have absolutely no asset behind them at all.
Yeah, of course. So as I mentioned, the clients that invest into our projects are secured by the assets of that particular project. So in fact, LL5, we acquired 2 large lodge parks the other day. There's a PR release on it, 300 million in gross development value. And again, we're only raising 37.5. But if anything were to go wrong, the clients are secured by those assets. And again, I'll echo my point where at this point in the market cycle, I think clients like to know that their money is in a real asset. I think that's really important for clients and for their comfort to know.
Absolutely. So there are 2 options with the product. The person could take interest or they could take income. Is that correct?
Sure. So depending on which projects you wish to invest in, we have monthly, quarterly, biannual and annual payments. There are 12 different series. I won't run through them all now, but we have the monthly interest, which is 12% or 1% per month, which is a really, really popular product. It's a low minimum investment as well. Clients get proof of concept within 30 days. But then we also have the biannual, which is 15%, which is 7.5% every 6 months. And that's £25,000, dollars or euros. And then for the annual payment, that is a higher minimum, so it's £100,000, dollars or euros, but they earn 17% annually. So that's the capital growth version of the other 2.
Okay, brilliant. And you said there were 27 currencies. What are the currencies at the moment that you're finding over the last 6 months or a year that people are investing with?
Sure. So notwithstanding the pound, dollar, euro, we've got AED, so Arab Emirates dirham. We've got Saudi riyals, Australian dollar, Thai baht, Japanese yen, Mexican pesos is a really good one for us as well at the moment. Swiss francs we accept as well, Polish zloty. So there's a lot of different currencies that people like to use, because what happens is they get their coupon or their interest in, say, Swiss francs, and they get their capital back in Swiss francs as well. So they completely hedge their currency exposure, and of course with no fees as well. That's a really attractive option for them.
Okay, brilliant. I think you certainly have already answered how that you achieve such returns. I think that you made it very, very clear. But for those that came a little late, I think if you can just reiterate how that you generate the returns that you do. I think you did just mention a little bit about it actually in the returns, where you're talking about purchasing the properties at incredible values way beyond their actual value.
Yeah, of course. So our business model is buying distressed assets, not ones that are physically falling down around us, but those that are subject to repossession. So vendors that come to us to sell their asset, it's because they're desperate. And these are usually companies, large and often listed companies. Our commercial assets are bought from these types of vendors, but they also want to do it very quietly, Brian, which is really important because it means that we have more leverage in the room to be able to acquire these assets at more significant discounts. But we can't use banks because banks are too slow. If an asset is subject to repossession, we have to move on it very, very quickly. So what we do is we raise capital from our network of private clients across the world, which enables us that, or gives us that speed and agility to acquire assets between 40 to 50% of market value. And then, of course, when we have acquired that asset, we'll then implement our strategy, whether it's repurposing, redeveloping, which then adds more and more value as well. So that's how we're able to pay the likes of 12 to 17% per annum.
When I look at the returns that are likely to be generated, it looks like you can do that quite easily. So in the last year or two, have you seen quite a change in the uptake being affected by the markets that's heading in the upward direction and then suddenly turns and back to the downward direction? Then it's a bull, then it's a bear, you're not sure where it is. So have you seen a large uptake in the last short time?
Yeah, I think there's 2 reasons for that. So our business model accelerates during economic uncertainty, of course, we're offered more and more assets. At the same time, clients are looking for an alternative investment that is non-market correlated. So regardless of what the market does, they still earn that fixed return. So at the same time as we're offering more assets, we're able to raise more capital as well. So over the last 2 years, we've over doubled our client base. We're reaching into new regions all the time. We're opening offices in the likes of Spain. We've opened one in the US, Canada, and we're growing into the likes of Latin America, all across Asia, as we see more and more reception to the offerings that we present to clients.
Okay, brilliant. So the process is quite simple. If a client is wanting to invest, he would then just touch base with myself, indicate the amount. We'd fill in an application form, and it goes a little slower than that because getting clients' documents together is a little slower than that. But nonetheless, it's quite an easy process. The money's invested, and you get your certificate. It's quite a nice, easy flowing method, and then you have your certificate that gets posted to you.
Of course, yes, it's a very short application form. You're not looking to fill in War and Peace, and we just need the standard KYC or AML, so proof of ID, proof of address, and source of funds. That application will come over to the 79th group, and we aim to process and approve that within 24 hours, where you'll be issued with the banking coordinates. Once you've remitted the funds and they've been received, we'll confirm that on email. And the day that the funds are received, so say they're received today, your investment will start on the 5th of December, and then you'll get, depending if it's 1 or 2 years, it will then mature on the 5th of December next year. In the meantime, you will then receive what's called a welcome pack. That's your certificate of investment and the deed of accession, which is what goes to the security trustee that essentially says, for example, Brian has invested £25,000, and in the event of default, we will look to recover these funds to yourself.
Brilliant. So in the case of looking to invest, please just touch base with me. I think, Ben, you've given us a good round off of the product and the opportunity to diversify a client's portfolio. So I think it's a great opportunity for you as a client, or if you have friends, or if it's a company that you want to invest through. So please just touch base with myself, and I will certainly be able to assist you. So if you need a recording of this, I'm more than welcome to touch base. But I think one of the great things is just set up another meeting with me directly after this. If you were not on this meeting and you just got this as a recording, then the best would be is to set up a meeting. Let's have a discussion and see if the product actually does fit into your portfolio. And if you have any other questions, then obviously you can fire them away at the same time. So look forward to chatting with you at some point. But thanks, Ben, so much. I think that was very clear and very helpful. I believe this product can certainly assist clients to diversify their portfolio. So thank you for joining us. I trust you have a wonderful day, the rest of it, and have as good weather as what I'm having in the wonderful little island of Mauritius, which is where I'm based. So thank you so much for your time. In the mornings, some of you in the morning, some of you on the same time as me, some a couple hours behind, and appreciate your time. Thank you so much. If you missed some of it, I see that some of you joined a little late. You're welcome to the recording. Let me know, and I'll just pop the recording over to you, and we'll have a chat after that. Ben, thank you so much. I really do appreciate it.
Thank you, Brian. I appreciate this, and thank you everyone for listening. I look forward to touching base with you soon. Thank you.